Carney's pipeline deal with Alberta, a turning point in Canada's energy policy. In a dramatic turn of events, Prime Minister Mark Carney and Alberta's Premier Danielle Smith signed a Memorandum of Understanding, MOU, this week that could reshape Canada's energy exports and has already shaken up the federal government. The agreement lays the groundwork for a possible new oil pipeline from Alberta's oil-rich fields to the Pacific coast, its core. The deal aims to reduce Canada's reliance on U.S. markets for oil exports. Carney stressed that over 95% of Canadian energy exports currently go to the U.S., a concentration he now calls a strategic vulnerability in a volatile global trade environment. By redirecting oil to Asia via a West Coast port, Ottawa and Alberta hope to diversify markets and revive energy sector investment, what the MOU covers and what it changes. The agreement promises several changes that together mark a clear policy shift. It opens the door for a pipeline that would transport Alberta's bitumen, heavy oil, to a deep-water Pacific port, potentially enabling exports to Asia rather than being locked into the U.S. market. As part of the deal, Ottawa agrees to review or amend the existing federal moratorium on oil tankers off parts of British Columbia's coast, a ban that has long protected sensitive coastal waters. In exchange, Alberta pledges to raise its industrial carbon pricing, and both parties commit to launching a major carbon capture and storage (CCS) initiative in the province's oil sands. The plan also envisions expanded electricity generation, potentially nuclear, and enhancements to Canada's electricity grid, including transmission links to neighboring provinces, reportedly to support both new industry and clean energy goals. The MOU proposes that the new pipeline be submitted to the Federal Major Projects Office by July 1, 2026, a signal that Ottawa may treat it as a high-priority national interest project. Carney framed the agreement as the start of a broader plan to turn Canada into an energy superpower, able to compete globally, not just serve as a supplier to the U.S. backlash and a high-profile resignation. Within hours of the signing, Culture Minister Guilbeault, previously the government's environment minister and longtime climate advocate, resigned from cabinet in protest. In a statement, Guilbeault said the MOU and the accompanying rollback of certain environmental protections marked a fundamental break from the climate action agenda he had championed. He criticized the decision to lift the coastal tanker ban and exempt Alberta from clean electricity regulations, even in exchange for higher industrial carbon pricing and a CCS project, calling it a serious mistake. Guilbeault said that when he entered politics, it was to fight climate change and protect the environment. He added that this deal would move Canada further away from its greenhouse gas reduction targets and that he could not remain part of a government making such choices. He pledged to remain a member of parliament, but his resignation deals a heavy blow, both symbolic and practical, to Carney's vision of balancing fossil fuel expansion with climate-friendly rhetoric, opposition, risks, and the road ahead. The proposed pipeline and its accompanying regulatory relaxations face mounting opposition. Officials in British Columbia, including Premier David Eby, have voiced strong objections, citing environmental risks, the vulnerability of coastal ecosystems, and potential backlash from coastal communities and indigenous groups. Indeed, a coalition representing coastal First Nations has rejected the prospect of oil tankers off the Pacific coast, pledging to block any pipeline project. Even supporters of energy expansion have warned that major hurdles remain. There is currently no private company publicly committed to building the pipeline and financing such a project, given global price fluctuations and rising investor awareness around fossil fuel infrastructure, will be challenging. Ultimately, even if the MOU becomes the basis for a full plan, real progress will depend on reaching consensus with BC, securing Indigenous cooperation or co-ownership, and convincing private investors that the pipeline is economically viable and socially acceptable. Significance, a new direction for Canada, but with uncertain outcome. The Carney-Smith agreement marks a watershed. It signals Canada's return, under a Liberal government, to aggressive fossil fuel infrastructure expansion after years of climate-oriented policy under the previous administration. It stands as evidence that geopolitical and economic pressures, including shifting U.S. trade patterns, are prompting a rethinking of energy priorities. At the same time, the resignation of a senior climate-minded minister underscores how risky this pivot is politically. The tension between economic ambition and environmental responsibility has resurfaced, and perhaps with greater force than ever. Whether this plan becomes reality, and whether Canada's touted energy superpower trajectory turns into long-term prosperity or environmental reckoning, remains to be seen. What is certain is that the debate over the country's energy future has entered a new, more combustible phase. Further watching on this story by following and subscribing.